Scott, as co-president of THL Partners, your firm holds $14 billion in funds under management. What sectors are attractive to private equity right now?
We're looking both for sectors that have good secular growth that's not necessarily tied directly to GDP, because in a period like this, GDP has obviously been sluggish, and so you're looking for some areas that can grow better than that. As we've looked at those areas, things like business process outsourcing, serving companies with the ability to do certain key business processes better than they can do internally, particularly at a point in time when many companies are trying to turn fixed cost into variable cost, is something that's important. Other areas that we've seen recently become very strong would be retail. Now, it's a play, of course, on the return of the consumer, and the consumer is doing a really good job of trying to fight and stay in the game, even with a relatively sluggish recovery where there's still been obvious issues with employment.
What about deal sizes? Are we looking at middle market deals, larger deals? How do you think deal size later this year will compare to deals that we're seeing right now?
I think the deal we're focused on, and have been for quite a while, on companies in the $250 million to $2.5 billion size range. We've obviously done some significantly bigger investments, bought some companies significantly bigger than that. But we think that the best opportunity would be in that size range. And we think that the credit markets strongly support deals in that range. The credit markets will support deals, I believe, up to $5–7 billion of enterprise value. Where the credit markets start getting a little tougher is if you go much higher than that. And so we haven't seen that $10 to $20 billion deal get done. And one of the issues is whether or not the credit markets have become deep enough to support a deal of that size.
When it comes to IPOs, how does the private equity-backed IPO pipeline look?
There's obviously been some pretty interesting IPOs done, particularly on the venture side recently, but we've also seen some good strength for traditional private equity buyout companies that are now at a point where they should re-enter the public markets, where they can use the IPO to delever. What you generally don't see on the private equity side is the IPO as the direct form of finding liquidity. Very few IPOs happen where the private equity sponsor actually sells a significant portion of their investment into the IPO itself. So you're using the IPO as yet one more part of the growth cycle for these companies, where you use the proceeds for deleveraging, you have a currency that you can use for acquisitions, and you look over time to achieve liquidity by selling your shares in the market, but that's a process that often takes a number of years.